Hi, welcome to another episode of Funny Finance Guy. And in today's episode, we will talk a little bit about AirAsia, whether we should buy, hold, or even sell the stock. So, amongst the reason why AirAsia is very popular right now in many people's radar is that the stock has dipped quite significantly to 75 cents as of 22nd of May. To put things into perspective, AirAsia at one time was trading at 443, while its dividend yield is 32%. So as an investor, we always want to find stocks where we can buy low and sell high. Aside from that, while waiting for the stock to maybe normalize to its maybe average price of perhaps $2, we can enjoy dividends of 32% while waiting. So it's a win-win actually. It is a relatively compelling investment if you ask me. So right now, with what's happening globally, social distancing, and also many countries putting their borders on lockdown, the airline industry has been impacted quite significantly. So for those that want to invest, we are hoping that what's happening globally will come to pass, everything will be back to normal, and eventually this stock will also normalize at a certain price. Having said that, however, let us look a little bit on AirAsia's history, their financial performance so far, and what this current environment means to this stock, whether this company could withstand such an environment. Historically speaking, AirAsia used to primarily serve the ASEAN region. Having said that, however, as years went on, they increased their operations right now serving the Asian region per se. Therefore, if we use that particular hypothesis, a good place to tag AirAsia's growth would be looking at the ASEAN's GDP growth. And why this is important is as the region gets richer, our disposable income increase. And as our disposable income increase, we will have enough money to travel. So when the regions get richer, the demand for travel would increase. And when the demand for travel would increase, AirAsia, being a proxy of this, would enjoy a growth in revenue. And when looking at AirAsia's market share, we can see that they are very dominant in Malaysia, Thailand, and Philippines. They do also have a presence in Indonesia and also India. When looking at their 5-year financials, we can see that their revenues has been growing. In fact, from 2014 to 2018, their revenues doubled, while their net profits increased quite significantly. Aside from that, we can look at the operating margins, which has been relatively healthy. While the net profit margins, we can also see it's in the positive region. What I'd like to point out over here is, please note that within the air travel industry, the margins are relatively thin. And another thing we can notice is that the margin seems to fluctuate up and down quite significantly. One of the reasons for that is fuel is one of the biggest cost driver for the airline industry. And as we know, fuel prices did fluctuate quite significantly during this past couple of years, where it actually hit almost $150 per barrel at one time. Having said that, if we look at variables where AirAsia can control, we can see that their load factor has been hovering around the 80%, which means that for every flight they take, on average, as much as 80% of the plane gets filled up. And another thing we can look at is the number of flights that the company has been taking so far. It has been increasing. And amongst the reason for the increased number of flights is that this company has been rapidly increasing their number of fleets, as we can see over in this slide. Now that we already have seen AirAsia's growth for the past couple of years with their fleet expansion, let us now focus on what's happening right now and if AirAsia's business model is strong enough to withstand the environment today. So the first thing I would like to do is highlight some news flows. The first being this over in the slide, which was reported by The Edge, that basically summarized one of the analysts' reports stating that AirAsia's current cash flow, after doing some adjustment, can only last them for the next 5 months. Another interesting news flow which came out is Warren Buffett is selling all of his airline stock. So this is a worrying signal for most investors, whether we should buy, hold, or sell. Aside from that, when looking at the ground, we can see many SMEs right now, they are employing either pay cuts or some of them are also employing some layoffs. When this happens, disposable income will drop. And when disposable income drops, traveling will also drop. This would be both for personal traveling and also business trips. So why would this matter? Well, for most airlines, their business model runs basically like this. They would buy the plane on debt, and as we know, AirAsia has been increasing their fleet quite rapidly. And when you buy things on debt, every year we have to bear financing costs, and that will be our fixed cost. Imagine an environment where there is high fixed cost and there is low revenue. So this is a situation faced by many airline stocks. So over here we can see the same slide where thus far AirAsia has been increasing their fleet year after year after year. So every time when they increase their fleet or increase an airplane, they will take up more debt. And when they take up more debt, what will happen is that their fixed costs would also increase. Having said that, however, I did cover AirAsia many years ago as an analyst. And during that time, I still remembered the management of AirAsia had to deal with the spike of oil prices. And at that time, many airlines were in trouble. But AirAsia, as we can see today, managed to ride that particular issue. The second thing which the management of AirAsia does is they always try to find ways to increase their profitability. So I'm sure if any of us went on an AirAsia flight, we will see things like hot seat, red carpets, their merchandise on air, so on and so forth. And finally, this is taken from one of their older slides in 2012. First and foremost, I'd like to apologize. I am a retired analyst trying to build his passive income. So I don't work with much resources and I don't have any access to the management. So I'm using old slides over here. But what I want to say over here, the cost for AirAsia is one of the lowest amongst the other airlines. So in conclusion, what should one do? On one hand, we have a global environment where we cannot control. On the other hand, we have a very innovative management over at AirAsia. My take on all of this is that it is still too early to invest. One of the reasons why is that there is so many uncertainties. Number one, when will the world be cured? And more importantly, when would we as individuals or when would businesses start traveling? And when can we see numbers normalize to traveling before this incident happened? Number two is the SMEs around us. How many would continue operating? How many would declare bankruptcy? And even the ones which are operating, I'm sure a lot of them has dipped into their cash reserves and perhaps they might cut down on their traveling expenses. The third variable is that if the job market is weak, chances are many people are going to cut back on their non-essentials, and that could be airline travel. So it's too early to invest and there are just so many uncertainties. But the management of this company is very resilient, very innovative. They have rode through many bumpy roads, and this perhaps could be another bump. So that is my thoughts on the company. If you have any questions, please do ask. Put it in the comment section. Until next time, I hope to see you in the new episode.